In this video, we are going to break down the ascending triangle, a pattern that signals an upcoming price breakout. Spot it early and you are set for a strong trade. This is what you will learn: how to spot the ascending triangles, what it means for traders, and how to use it to make better decisions. Let's take a closer look. Here's the situation. The price is bouncing up and down, up and down. It keeps hitting the same resistance level at the top. But look at the lows. They are getting higher and higher. This is your ascending triangle forming. Use this ascending triangle formation checklist. The top is flat, the lows are rising, the spikes are narrowing, which hints at upcoming breakout. If buyers win the battle, price surges past resistance, which means it's time to go long. If the price breaks below this support level, it means the bears won, and it's time to go short. But here's the catch. Not all breakouts are created equal. Sometimes price fakes a move and drops instead. That's why we need confirmation before jumping in. Looks for a strong breakout candle, higher than usual trading volume, and at least 2 higher lows for validate the structure. That's how you know it's a real deal. So, how do you trade the ascending triangle? First, use supplementary indicators like moving averages and RSI for confirmation. You can learn more about them in our previous video. The link's up top. Second, enter at the close of the first candle after the breakout. Third, place your stop loss at one of the previous lows depending on how aggressive your strategy is. And just like that, you'll learn one of the most powerful candlestick patterns for these spotting breakouts. Hit that like button if this way was helpful, and subscribe for more quick insights.